Hello and welcome to the Weekend Investing Daily Byte. We're shooting this episode on 12th of July, and today we are going to talk about the auto sector. We're going to see the trends in the auto sector and some recent developments in some of the stocks of the auto sector and see if we have a trade there. But first, a look at the markets today. So Nifty, I've for purposes of showing you clearly what happened intraday, I'm choosing a hourly chart today. So you can see that Nifty again opened at nearly an all-time high. It has tried to do this at 19,520 for the last four sessions, twice before. And today also the open was at 19,520, but the open was also the high of the day, which, if you don't know, is always a high probability day that if the open is same as high and you can see it in the first 5, 10, 15 minutes, then there is likelihood that it remains the high of the day and it will be a down day. So this is some technical advice for technical for those who are trading the market. And after coming down in the first few hours, it did retest the bottom here, bounced here, but then collapsed in the last hour, 2:15 to 3:15 hour, and closed this gap that existed prior to the 11th opening. There is a lot of churn that was happening today because today was also the last day for HDFC stock in the market. All the HDFC stockholders will get HDFC bank stocks, and also this is causing a huge churn in the Nifty with percentage changes of allocation changing, and that L&T Mindtree stock coming into the index. Uh, the idea that the markets is advancing as was yesterday was kind of hit today, with Nifty not really giving a continuation of what started yesterday. But I think still the markets is not over and out yet. I think we are still very much in the play for newer highs, and that is borne by the fact that the broader market didn't do what the Nifty did today. But within the Nifty heat map, you can see there is hardly any green today. Some green in ONGC, some in Aisha Motors, coming off a 4 or 5 days of fall there, based on those bike competition. JSW, Grasim gradually minor gains here. Kotak Bank with a minor gain here, but more or less you can see HDFC twins losing ground. Infosys ahead of results. Uh, Infosys and TCS usually set the trend for IT stocks. That is awaited how they will play out. Um, Tata Motors, Maruti, Bajaj Auto also losing ground. Ultrasemco also losing ground. NTPC, Power Grid, Adani Enterprise all down, and FMCG also down a bit. Sectoral overview: PSU banks up 0.8%. Rest are the all other sectors between 0.3 and minus 0.3, and IT losing the most. So no major moves on any sector. PSU banks a little bit higher and IT stocks a little bit lower. And that was pretty much for the sectoral part. Although PSU banks over the last 1 month remain the most gaining sector at 10%, followed by pharma. So pharma is coming up rapidly. I think the charts are showing that pharma is recovering. So look out for trades on pharma. If you are a discretionary trader, you'll find some good trades there. And of course, auto is doing well at plus 6.4%. So always see which sector is doing well over a month, over 3 months. You will start to see the trends when you will see that, and then once you know which sectors are in trend, then you can do a singular stock approach and see where stocks may give you a good trade. Mid cap index, you can see here, opened gap up, came down, filled the gap in the next 2 hours, and then went up again. So this is very contra to what Nifty did. Nifty came down in that hour, 215 to 315, whereas mid caps actually went up. So broader market, no signs of weakness here. Small caps went up in the first hour, but the next 5 hours it just slipped, but did not close this gap, did not breach the lower part of the day, which again is a sign of strength. So mid caps and small caps are not showing any give up as of now. Nifty Bank as I've been mentioning in last many sessions, is the weak part, the weak link in the market right now. It has come very near to the breakout of this month and a half box that we had. And I would think it would be good if we take support here and bounce off. If we break down below this level, I think then we are again back to, into that ranged environment. And if Nifty Bank becomes ranged, I don't think Nifty is going anywhere. So Nifty usually follows the lead of the Nifty Bank, and Nifty Bank, as you can see, had come to a near previous high as early as May, and Nifty came much later. So I think the same logic also applies on the higher side and on the downside, that the banking sector leads the market more often than not, and that is what we need to see, strength back in the banking sector. Now let's talk about the auto sector, the theme of the day. We can see that autos have been long languishing. I think I've cut the chart here, but nevertheless, it's a long breakout that happened last year, and did some consolidation here, and it did a retest of this breakout, and since last many weeks, 3 or 4 months, I mean, autos have been zooming like anything, and several, whether it is four wheelers, whether it is two wheelers, whether it is motorcycles, whether it is trucks, the sector has been doing well. And so one part of the auto sector is also the used car market. So the used car market, we only have one player there, which is car trade, and car trade has been languishing since the IPO. Opening price was 1600. It immediately, within 5 6 months, collapsed to 400 levels. Then later on, by April of 23, had collapsed to 350. Now from 350, it has recovered to 530 odd. What is happening now is that car trade is acquiring the automotive portion of OLX, which is very successful. I think OLX, in some reports, said that they have done 1100 crores of revenue on last year, and this year's figure was higher. And I think car trade also has done 110 crores since last quarter. So extremely, good meaty numbers. And what I've seen is that, although, I mean, from a technical perspective, you don't need all this narrative, but whenever there is narrative which coincides with, technical formation, like you can see an inverse head and shoulders pattern playing out here. If this is coinciding with the fact that there is announcement of an acquisition, then it might change the trajectory of that stock for a considerable period of time. That can happen. So always look at, also, besides just the technical formation, is there any news around, and that is just a big bonus for you to build your conviction in your trade. So inverse head and shoulders here, the right shoulder is formed. We are still not yet above the neckline, so it may require more volumes to go up. But once it does start to go up beyond 560 on good volumes, I think a trade to 720, 725, this level, 730 levels, is going to be a fast one. So and stops could be below this bottom here at 475 volt. So I think a good trade with good position size and risk ratio is available for those discretionary traders. Of course, it is not going to come in our momentum portfolio anytime soon. For that, it will need to fly for some more time, and get to our minimum filters on that. So this is all I have for today's market update. Thank you so much for watching and giving your love. And do share this video with your friends, your investment groups, and do give us your comments, and you like and subscribe to this channel if you like the content, and do spread the word around. Thank you. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.